Walk your high street and count the shutters. Last year alone, the UK lost roughly 37 shops a day. That's thousands of units gone, staff let go, stock liquidated, and lights out. This year, costs kept climbing. The business rates discount for retail, hospitality, and leisure dropped from 75% to 40% in 2025 to 2026. Just as many leases and energy deals reset. From April, the legal minimum wage stepped up to £12.21 an hour, and employer national insurance rose to 15% with a lower threshold. Small changes on paper, big numbers on payroll. Meanwhile, online sales kept taking a bigger slice. September marked another monthly rise, even as overall retail volumes only nudged up. Footfall on many high streets drifted or fell slightly through late summer. And vacancies? In some towns, empty units are stubborn. Nationally, high street vacancy rates remain elevated, with sharp divides between places like London and cities such as Bradford and Newport. So, when people ask, how much longer? The honest answer is, it depends where you trade, what you sell, and how fast you can change. So, what's actually affecting the high streets right now? Firstly, business rates. They land whether you've had a good week or not, and many stores are still paying against valuations that don't reflect current trade. If you haven't checked your rateable value or reliefs recently, you're probably overpaying. And when the discount steps down, it happens immediately. Then there is staffing. People make the shop, but 2025 made people more expensive. Things like higher minimum wage, higher employer national insurance, and a lower national insurance threshold that changes the break-even on quiet hours and makes admin creep expensive if it's done on the shop floor. Also, stock and production. Cash always leaves first. Things like MOQs, longer lead times, and supplier rises. If slow-moving stock piles up, it will choke cash you need for rent, rates, and payroll. Returns and shrink are a second hit if your receiving and restock flow isn't a well-put-together system. Businesses also have VAT to worry about. VAT is simple until timing isn't. If supplier terms collide with your VAT quarter, you can be profitable on paper and short on cash the week your payment is due. Energy and rent resets along with payment fees, chargebacks, and shrink all quietly drain businesses too, and small bits of friction that keep customers out, like parking, dull windows, and a clunky queue flow. None of these are headline costs alone, but together they erase margin. There have been some bright spots. Retail parks have outperformed in 2025, and some categories had a better summer. However, the high street picture is uneven, and online continued to grow month after month. Here's what the high street shops can do in the here and now. Firstly, stabilise fixed costs by rechecking their rateable value and claim reliefs they can qualify for. Also treat rates and rent as monthly, first covered costs in pricing and range, so they don't snowball late in the quarter. Secondly, put people where profit happens. For example, staff for demand, not habit, trim the dead hours and extend the peak. Also keeping face-to-face roles in store and moving admin off the rota, stuff like supplier chasing, inbox, listings, bookkeeping basics, and CRM. Then there's making stock move, a weekly kill list for slow SKUs with clear reorder points, better terms with suppliers, so stock lands on time. Pair this with tighter returns, so cash gets back on shelf fast. Lastly, to fix VAT timing, invoice on dispatch where possible and nudge supplier terms so big outflows don't collide with the VAT date. Also, keep a visible cash calendar. VAT, rent/rates, payroll, major POs. Make sure to reduce friction and then mark it locally, clear the windows, clear hours, and clear the path to the till. Use click and collect to cover shorter quiet periods and build a simple email list for weekly new in or limited run no's. Here's where we fit in as the Ovara Group. We help SMEs hold the line on costs without gutting service. We place offshore Filipino staff to help with things like bookkeeping basics, procurement, follow-ups, price checks, inbox/chat, listings plus content updates along with CRM hygiene and reporting. We put together simple playbooks so your tasks run the same way every day, even in peak season, and implement clean dashboards that track margin, labour percent, stock turns and cash on hand, reviewed with you weekly. The result is your in-store team focuses on customers and the back office hums in the background, so admin cost drops and decisions get made faster. High streets are a big part to the UK, and they're not just shops, they're businesses run by people like me and you. We founded the Ovara Group to help SMEs not just survive, but also grow whilst lowering costs.